Good evening and welcome to the weekly review uh, of the market indices. Uh, Two important things that I want to speak about today. One is how are the overall indices doing? If there any change in structure on any of these? Most likely we'll see not much because, like I said, when the markets start dropping, you shift your time frame to weekly, uh, and that's what I've been looking at for the past few odd sessions now. The second most important thing is now the result season is coming up, which means the quarters ending for September, the results will be coming out for most of the companies which are good at reporting very quickly. Some of them will be late in November, some of them could even be late as in December. So I want to show you on Screener, which is the tool I use, basically how I track the results of my investments that I've already done. Uh, I'm not sure if we spoke about Lloyd's Engineering in one of the sessions, but Lloyd's Engineering is something that uh, I have a vested interest in and I have a position on. Maybe probably I bought it maybe a month ago or a month and a half ago. I don't remember the exact date now, but Lloyd's Engineering is something that uh, that was I found interesting and I took an investment bet in it. So I'll show you what how quickly on Screener you can keep a watch on, even if you own 100 stocks, 200 stocks, it's very easy to keep a watch with all the kinds of tools that are now available in the market, right? So first let's look at the indices. In Nifty, there is no change in structure. As you can see, the pivot low remains intact at 23,893. We are far off from that. Sensex, similar story. There is no change in this pivot. Bank Nifty again, no change. The pivot continues to be at the point. Finance also, there's no change. In auto, we are slightly closer and weaker. Uh, as you can see, we are very close to a weekly pivot point. Now that could hit, could not hit. It's all something that no one knows at this point. PSC again, as I said last time, PSC has already moved into a bearish or a flat indecisive zone. So that's something that is not really worrying, but yeah, it's something to watch out as a sector to not bet too much on those sectors. Metals again similar, no change. It is bullish. Uh, Realty continues to be a large range item as of now. I would want to see this particular high to be taken for me to then shift this particular pivot point somewhere here. But until then, I think realty continues to be in the same structure. It's quite laggy, it's quite flat at the moment. Energy, again, similar to PSC, we are seeing it very close to the pivot point. That is slightly dangerous, but uh, we can say much until the structure is broken. PSUs, you can see already the structure has been taken out as I gave an update in the previous one also. Infra also the structure has been taken out. FMCG also, if you see on a weekly basis now, look at the drop in FMCG as compared to what we were seeing a few weeks ago. So it has dropped 4 weeks continuously. It has gone below this particular low, which was a key low on the weekly basis, and that is what has been breached, right? Now, what I would want is for this to be confirmed, what I would want is a high forming somewhere here without breaking this high, a high forming here, and then breaking down below this low again. That would 100% confirm FMCG into a bearish trend. CNXIT continues to be on the holding side despite all the Nifty and broader markets falling. Pharma continues to be in the same structure. So if you see the only two structures which are very strong at the moment is IT and pharma. Very likely so. Those are defensive sectors, and when the high beta sectors stop rising way too fast, the low beta sectors is what takes charge of the market for a while. So that's all the indices. Now coming back to the results. So this is my personal feed This is my core watch list. This is how you see on screen are every single uh, item that comes in. And if you see, a few things have happened on Lloyd's Engineering very recently. Now, it may not be very efficient in reading all of that, but generally what I do is I have a watch list view. Now, please don't take all of these stocks to be a holding sign. Yes, I do hold them, but they are all bought at different times. So do not take this as an advice to invest. Do not take this list to be a personal recommendation of any sort, right? So now if you go into Screener, you go into feeds, there is a tab called quarterly results. If you hit into that, and in the watch list view, if you go to in core watch list, then it'll only filter those which you have invested and followed. Right now, if you see Lloyd's Engineering something that came up with results. Now, do you see on YOY terms on a quarterly basis, Lloyd's Engineering has had a sales hike or uptick of 74%, net profit increased by 50%, and the EPS increased by 50%. Now that is EPS increase is not a joke, right? It's a significant one. So Lloyd's Engineering, that's why is continues to be in my portfolio. Now what I do is I do not spend a lot of time in looking at what exactly happened within the quarter. If the EPS, if the net profit, if the sales are giving me good numbers and good signs, I continue to hold it. Some people can continue to argue that the PE is at 92, it's very highly valued, it may not run higher. But believe me, if the companies are truly good and they start doing well, the P's can even reach to 250 and no one can stop the stock, right? So that's one. Avantail was one that was a recent buy. Again, maybe a month ago or a couple of months ago. Again, if you see the sales 43%, net profit going up by 41, and EPS by 41. The September EPS was 0.97 as compared to the previous year it was 0.69. So there is an uptick in this. So again, in these two stocks, I have no action to take in terms of investment horizon, right? That's as simple as it can get. This is what you exactly do for every other investment, right? Uh, just go into Screener, uh, and whatever stocks you hold, make sure you hit on the follow button here. There is a follow button. If you hit the follow button, it will come in your core watch list, which is an easier way for you to understand that yes, this is an investment that you have recently made, or this is an investment you're interested in, right? If you would like, in the same screener you can also have 200 DMA. That is also a good sign of long-term trend continuing. And if the stock is well above 200 DMA, there isn't a lot that you need to worry with. And again, in equity, remember, until there is a big fraud in the company or the company gets hammered by the regulator in some way, you will not lose equity to zero. Yes, it has happened in cases such as DHFL. There are many telecom companies. It has happened in case of Yes Bank, but those are cases where there were fraudulent activities. There were regulators hammering, asking questions, audits were being done. So in such cases, we lose a part of our capital. But then you have also made other industries, or you have also made other investments. So very unlikely that you will be the only one caught into that whole saga. So without panicking too much and taking it quarter by quarter, investing can be a very simple, very structured business. The only time I spend the highest on analysis is only before investing in the company for the first time. After that, it is a cakewalk to simply go and look at the quarter results and what they have done in terms of the quarter numbers, right? If they've done well, great. If they do poorly for 2 quarters together, then I start considering if it is the right time to move this money somewhere else, right? So within your investment, and at least for 6 months, I do not take any action of it. Even if it goes down, I invest slightly a little more. I do a little bit of pyramiding investment without fearing the fact that what if this goes to zero, right? It is not that easy for an equity stock to go to zero unless there is a fraudulent activity in the background. And that's why, again, it's my personal opinion. I don't have anything against the exchanges, but I don't feel comfortable investing in BSE stocks I somehow feel they are very rigged. Um, they're very liquid. They're very volatile, and the entry criteria that are there on BSE stocks, they're not very stringent in my opinion. So again, it's a personal choice. So I invest only in those stocks that are listed on NSE, not even NSE SME, right? Again, NSE SME is a volatile sector. I'm not interested in those. Maybe they'll give me a multi-bagger, but I'm not really interested because in NSE itself listed stocks, you have close to 4,600 stocks to look out from. And I think that's a very big list to scan and not really go into NSE SME, right? So I hope this was helpful. I'll see you the next time when I have an update next week for a few days. Like I said, irrespective of where the monetary policy is going, the inflation numbers are going, the good companies are going to continue to be good. They're going to continue to expand their horizons. They're going to continue to try and be more profitable as compared to the previous year to the previous quarter. If you have such companies in your portfolio, hold on to them because those are nothing but your multi-baggers. Uh, I would again suggest don't fall for gimmicks, tricks, signals that are given by numerous people out there. Investing is simple. Keep it simple as much as you can. With that, I wish you good luck and good investing. Until I see you next time. Bye bye.